Dear learners, welcome to Effortless Accounts Academy. This video relates to NET Set Commerce Multiple Choice Questions, Unit 2, Accounting and Auditing, Part 2. The Accounting Standards Board of India was established in the year 1970, B 1972, C 1973, D 1977. Answer option D 1977. The Accounting Standards Board of India was established on April 21, 1977 by the ICAI. ASB is a committee under ICAI which consists of representatives from government department, academics, other professional bodies like ICAI, representatives from ASSOCHAM, CII and FICCI. If the purchase consideration is calculated by adding the various payments to be made, the method is called option A, lump sum method, B, net worth method, C, net payments method, D, value of shares method. Answer option C, net payments method. Lump sum method, it is by paying a single lump sum. Net worth method, it is by taking the net worth of the business and subtracting any debt. Net payments method, it is by adding up the various payments to be made. This includes the purchase price, any additional fees or cost, and any debt that is assumed by the buyer. Value of shares method, by multiplying the number of shares outstanding by the price per share. The following relate to the shares of a company. What is the correct order? Option A, issue, application, call and forfeiture. B, application, call, forfeiture and issue. C, call, issue, application and forfeiture. D, forfeiture, application, issue and call. Answer option A, issue, application, call and forfeiture. The final accounts of a manufacturing company generally include the following statements. Option 1, balance sheet. 2, manufacturing account. 3, profit and loss account. 4, trading account. 5, profit and loss appropriation account. The correct sequence in which the statements are prepared is answer option B, that is manufacturing account, trading account, profit and loss account, profit and loss appropriation account and balance sheet. That is option B is the answer. Which of the accounting equations is not correct? Option A, assets minus liability is equal to equity. Option B, assets minus equity equal to liability. C, assets plus liability is equity. D, liabilities plus equity equal to assets. Answer option C, assets plus liability is equal to equity. Which one of the following statements is correct? Option A, increases in liabilities are credits and decreases are debits. B, increases in assets are credits and decreases are debits. C, increases in capital are debits and decreases are credits. D, increases in expenses are credits and decreases are debits. Answer option A, increases in liabilities are credits and decreases are debits. For example, when a company buys inventory on credit, inventory account data to bills payable account. So liabilities is increases, bills payable is credited. When a company pays an invoice, accounts payable account data to cash account, that liability is decreases when making payment. So accounts payable is debited. Arrange the following liabilities in the order of the company balance sheet. Option 1, bank overdraft. 2, bank loan. 3, share capital. 4, provision for taxation. Answer option D, that is share capital, bank loan, provision for taxation and bank overdraft. Intrinsic value of a share is given by option A, total net assets by number of shares. B, total assets by number of shares. C. Share capital by number of shares. D. Market capitalization by number of shares. Answer option A. Total net assets by number of shares. Match list 1 with list 2 and select the correct answer. Measurement of income is matched with matching revenue with expenses. Recognition of expenses is matched with accounting period. Basis of realization is matched with recognition of revenue. Identification of revenue is matched with accrues to the equity owners. So the answer is option D. Consider the following items. Option 1 debentures, 2 prepaid rent, 3 interest accrued, 4 bank overdraft. Which of them are current liabilities? Answer option 4 bank overdraft. Conversion cost is the sum of option A indirect wages and factory overhead, B direct wages, direct expenses and factory overhead, C direct material cost and indirect wages, D prime cost and selling and distribution overhead. Answer option B direct wages, direct expenses and factory overhead. Assertion: premium received on the issue of shares is credited to the share premium account but not to the profit and loss account. Reasoning: since share premium is not a trading profit, it is not distributed to shareholders. Answer option 3. Both A and R are true and R is correct explanation of A. Consider the following. Option 1 basic defensive and interval ratio, 2 current ratio, 3 super quick ratio, 4 quick ratio. Arrange these ratios in sequence to reflect the liquidity in descending order. Answer option A, that is current ratio, quick ratio, super quick ratio and basic defensive and interval ratio. Which of the following concepts is used as a fund in the preparation of a funds flow statement? Option A current assets, B working capital, C cash, D all financial resources. Answer option B working capital. Window dressing is prohibited due to option A conservative convention, B convention to disclosure, C convention of materiality, D arrear of book accounts. Answer option B convention to disclosure. Window dressing is a deceptive practice that involves altering financial information to make a company appear more profitable than it actually is. It's prohibited by convention of disclosure, which requires that all material facts be disclosed in financial statements. Assertion: ratio analysis is one of the tools employed to know the financial health of a concern. Reason: ratio analysis is not the only technique available to take investment decisions. Answer option B. Both A and R are true and R is not the correct explanation of A.